If you can do a good deal today, and you do just one a year, and you're 30, do one a year. By the time you're 40, you've done 10 deals, and that is a substantial amount of equity that you've probably built up over that period of time. And you don't need to do 50 deals a year. You don't need to do a $100 million deal to be successful. Success is defined in your own mind.
Hey everyone, welcome to an episode of Keys to Success brought to you by The Blueprint. And today we're here with my guest, Isaiah Osofisan, who he's a real estate syndicator. And we'll just get right into it, man, and, you know, get into your background and how you got to where you are in your career right now and why you got into that. And I think you have a very inspiring story, man, to share with the people. So without further ado, Isaiah, welcome.
Thank you. Thanks for having me. It's good to be here, and I'm excited to talk with you this morning. I grew up in Providence, went to a small private school called Moses Brown on the east side. I ended up playing actually a lot of sports in high school. I was all-state lacrosse, all-state soccer, and then after leaving Moses Brown, I went to Syracuse University and played some club sports up there, mostly soccer up there. So yeah, definitely played sports all my life, and now that I'm quite a bit older, I just kind of play golf and a little bit of basketball here and there.
Nice. So when you played soccer, what was your position? Were you like offense, defense?
Yeah, I was a striker for many years. I think I started playing soccer when I was 5, and I was kind of a born striker, but as I got to high school, our team wasn't really all that stellar, so I ended up kind of moving farther and farther back into the midfield. But I've always been a striker at heart.
Oh, yeah, nice. So, yeah, man, I guess, so I make a correlation sometimes, right, with people who, just being a guy, I feel like naturally you just grow up playing sports, or like really anybody in real estate, like even women, they grew up playing some type of sport, or there's something competitive about them, and then it's like whatever position they played in that sport, it really translates more into how they do business as well. And so, for you, like I know you said you play golf now and everything, but when do you find any correlation like that? Like, hey, I'm a striker. I'm the one, you know, getting things started. I'm the one who's trying to score. I'm the one who's trying to, you know, get things going. And like, do you bring that to your deals that you work on?
Yeah, maybe it's just a byproduct of me getting older, but you know, when I was playing sports and being a goal scorer, you know, you get a lot of the shine, you get kind of a lot of the accolades, and that is probably less of a motivation for me now. I generally like to fly a little bit under the radar, and I'm not getting big into any sort of fanfare or notoriety, but I think just having our projects speak for themselves is kind of what I'm most interested in, and then having our portfolio, you know, generate substantial value for the firm and for our investors.
Cool. You did mention that you went to Syracuse University. What did you major in there?
Psychology and entrepreneurship.
The entrepreneurship shows, right?
Yeah, I think that's something that, you know, a lot of people are kind of either fall into that category or they don't. Yeah, I mean, I think obviously real estate is a good way to express that. There are a lot of different ways to make money in the real estate business, a lot of ways to be an entrepreneur in this industry. I just ended up kind of going the investor developer route, and so far it's been reasonably good to us.
When you were taking classes at Syracuse in entrepreneurship, was the plan always with real estate, or did you have plans for like a different industry and then found real estate? How did that go?
I had always been interested in stock market and equities and investing, real estate. My mother was a realtor, so I was kind of clued into that world a little bit, but I certainly didn't have any plans to go into real estate when I was at school. I really didn't have plans much at all during that period of time, but I ended up after graduating, I worked in the tech sector for about 9 years for a small startup in Providence. And during that time, I kind of was buying small real estate deals as kind of a side hustle that a lot of people, that's kind of how they get into the business. And then that transformed over the last couple of years into a much more cohesive, focused real estate practice.
It sounds like for you, it was like, all right, you went the tech route, which is kind of like a, I don't want to say safety thing, but that was like more of your interest and everything. And then you kind of found your way now. Is there any way that you use tech now in your real estate business?
Yeah, I think a lot of ways. I think one of the things that I kind of identified as a potential edge would be to leverage the various technology and platforms that are out there to kind of streamline a lot of the processes that are part of a successful real estate business. I was pretty fluent in that language from being in that sector for almost a decade. So it was a natural way to implement that into this business. And I think operational efficiency is one of the things that has separated us from some of the competitors, at least in our local market. And that's one of the ways that we've been able to kind of generate some additional value that has not taken a huge amount of capital or effort simply by leveraging some of the tools that are out there. Going through various property management platforms, leasing, and then operationally kind of looking at how we can get similar outcomes with a fifth the effort, a tenth the effort, or resources.
Nice.
So I think there are a lot of different ways that you can kind of approach that, but if you're not looking at ways to use things like ChatGPT or Buildium or any of the other hundreds of various platforms out there that are kind of designed to provide efficiency, then you're just, you're missing a big part of the equation.
For me, like I noticed that like over the years when it comes to tech more so for the viewers out there, when it comes to technology and real estate, they call it prop tech. When you were working in your tech job, did you deal with prop tech at all? And if you did, what were those?
So I didn't. The company that I worked for was a highly specialized CRM platform, customer relationship management platform, and there are a lot of CRMs that are kind of in the prop tech sector. But the company that I worked for specifically sold CRM software to automotive dealerships. So I didn't have direct exposure to that, but we would go to trade shows and I would network with people that were in the prop tech sector. So I was aware of how that sector was burgeoning and that there was a huge amount of VC money flowing into it, and they were doing some innovative and novel things. So I think it was easy to kind of plug into some of those connections that I had from just the general software business once we started getting more focused about our real estate practice.
So I want to ask you a question about your background, right? Mm-hmm. So your last name is Osofisan,
yeah,
right? And so I know that to be a Nigerian last name. Mm-hmm. And so can you explain about like your family background and how that's influenced you to just on your life, like through school and profession?
Yeah, sure. So, Osofisan is a Nigerian last name. My father's first-generation Nigerian and came to this country for college. And the other side of my heritage is Irish, English, and Portuguese. So I've got a lot of different countries and continents covered. Cool. I actually ended up growing up in a single-family household, so my mom raised myself and my younger brother basically on our own for the entirety of our lives. And so coming up in that background, in that environment, saw how that was challenging for her and for our family. So it certainly gave me some drive to grind and hustle.
Nice, nice.
And I think that sort of adversity has been, a blessing. It may not feel like it when you're coming up in that way, but adversity, I think, breeds character, and you just, keep on hustling and see what you can make out of whatever situation you're put in.
You had mentioned that your start in real estate was when you started buying your own investment properties. Mm-hmm. And so what year did you start doing that? And like, what was the transition for you getting into syndication?
So I guess my first transaction was 2015. I had recently moved to Newport. I bought a 2-family house in Newport, Rhode Island, moved into that. And
nice.
then when I moved out, we were able to rent that unit. So that was my first transaction. I still own that building, actually. And then started looking at some bigger deals, and bigger, when I say bigger, not, 100 units or anything, but, an 8-unit deal that we ended up acquiring 17. And then from there, I was working full time still, of course. And then a couple of the folks that invested with me and had heard what I was doing and having some success with it, were interested in capitalizing some larger deals and making a more strategic and cohesive business. I had been in tech for 9 years. It felt like it was a reasonably good time to make the jump and do something on my own. So I left my firm in February of 2020, so like a month before COVID hit.
Nice.
And we had just bought an 8-unit deal, and then obviously the world shut down in March. Everything came to a standstill. Perfect timing to leave my, comfortable salary job. Ultimately ended up, after almost 6 months of being in standby mode, it ended up being a reasonably good year. We ended up buying 5 deals that year. So from September until the end of the year, we bought 5 deals and did pretty well with them. And then the following year, we were even more active.
Cool. Could you explain for our audience what exactly a real estate syndication is and how it works?
So most of our deals are kind of structured with one or two or a group of either family offices or high net worth folks, and we kind of put a capital stack together that makes sense for acquisition and operation. And then I've been very fortunate that my capital partners are patient, trusting, and have a deep understanding of what we're doing, and also a conviction in the strategy. So I think those relationships have been absolutely paramount to everything that we've been able to accomplish.
I gotta give credit to you, man. You've come up a lot in a short amount of time in what I've seen. And so just for the audience, for a little background, I reached out to Isaiah on a cold call because I saw that him and his company were making certain moves, and I'm like, wow, these guys are really doing it big, and they seem like they're very concentrated in certain areas. And so gave him a call. That's how we met and everything. And working on some things now behind the scenes. But for the most part, I gotta say, man, that sounds very interesting how you were able to make just that transition, and it seems like the timing for you was just perfect, where it was like, you know what, you knew you had to work the tech job, right? So you had to keep the lights on and everything. And then you got into real estate investing out of a necessity, right? Because you had to buy your 2-family. And, I worked in residential real estate, and I always try to encourage people to buy a multifamily first. Mm-hmm. And, like, it's interesting how you went from the 2 to the 8, Yep. And I think, for the strategy that you have and the wealth that you're starting to build for yourself, man, like, sky's the limit for you, man.
Well, I hope so. I mean, it's been a pretty interesting last couple of years for sure. You know, I think when I kind of made that jump, I had you know, full conviction in my ability to do it, and also I think full conviction in the actual strategy. You know, if you've got a process in place, if you've got a thesis that you are committed to, if you've got resources and partners who both trust you and can be there to kind of guide you and provide some perspective and some wisdom, you know, you can be pretty well positioned to succeed. So yeah, I think we've been active, quite active in the last couple of years, and certainly growing and looking to the future. I think it's exciting. We're in a very interesting kind of weird time in the real estate business.
Oh, yeah.
And I think if you, again, can be well positioned to be opportunistic when good opportunities come around, and be disciplined right now and be patient right now, then you know you'll be in a pretty decent spot in a year or two from now, and hopefully you haven't made any major missteps that expose you to anything that might come up in the future.
In your path, is there anything that you feel you would do differently to get to where you are now, or help you to get to where you are faster?
Yeah, I'm sure there there are a lot of things. I think focusing. One of the things that I realized after doing a handful of deals was that relationships being everything. I think as deals get bigger, more complex, if you get into the development realm, there are many, many more moving parts. So I think understanding that you need to have a myriad of lending relationships is critical. You know, if you buy a single family home or a 4-family, you probably almost certainly went to a bank to get a loan, to get a mortgage. It's good that you have that relationship, but it's important to have sort of a network of lenders, because they can specialize in different things. They can provide additional value-added information or insight. And you know, this past week, we've seen a whole lot of different things happen in terms of the banking sector and some exposure there. There's also a risk management component to that. So I would say, frankly, try looking at creating some relationships with various lenders. I would have done that a lot sooner had I known how much value those different lending partners can bring to the equation, and how you can kind of leverage those various relationships to specialize in particular deals. So that would certainly be one thing. And then, you know, in the beginning, I think it's inevitable that, you know, you're kind of doing everything. If you buy a 2 or a 3 family, like, you're painting the bedrooms. If you can, you know, swap out the cabinets, you're doing that. You're doing the landscaping. You know, that's just natural. That's the way that you generate value, is through your own effort.
Yep, the sweat equity.
Exactly. So, you know, you've got to, you know, there's no substitute for that, and I wouldn't have exchanged those experiences for anything. But if you do want to scale, then I think you've got to understand that you have constraints on your bandwidth, and that you have to put some pieces into place, or personnel into place, that allow you to amplify your bandwidth, and also be spending time on the things that are most salient, most profitable, and are going to generate the most value for your book of business and for your investors. So don't spread yourself too thin, even though in the beginning you're going to kind of have to.
Yep. Okay. So what would you say has been your key to success in your career so far, in your real estate career?
Discipline. I think discipline and preparation have been huge. I think we have been, in the last handful of years, we've all been beneficiaries of a enormous bull market in the real estate business.
Yeah.
So I think a lot of people, including myself, have looked a lot smarter than they maybe are, just by virtue of a market that's going pretty much straight up. So I think in those markets, having the discipline to not think that you're infallible and not jump at every single opportunity has served us pretty well. I think that we are well positioned and don't have any major exposure or weaknesses, and I think that we have invested in a way that is sustainable and kind of has like at least a 10 plus year outlook.
Nice.
So that's not to say that some event or some oversight can't, take us out. But I think having the discipline to stick to the deals that your original strategy kind of dictated was your bread and butter. Especially in the beginning, you have to build up trust with your investors. You have to build relationships with, all the various vendors and tradespeople that you work with. I think one of the things that we've done well is surround ourselves with really knowledgeable, capable people, architects, engineers, attorneys, CPAs, operational people. So all the things that I didn't know how to do, I was at least aware of that and didn't have any ego about it, and was happy to bring somebody into the room that knew much more about it and could navigate those waters expertly. And if you have to pay a small premium, even if you have to pay a large premium, in the end, you are getting the benefit of their expertise and their experience, and you just simply don't have that. So you kind of got to pay for it.
Yeah. I think in my experience too, in dealing with younger investors and dealing with people who are just newer to real estate, a lot of people don't understand that concept where it's like, you're not so much paying the person, you're paying for their expertise, for their knowledge, right? And for me, I just like to call it tuition. So, yeah, man. So that was your tuition, was that, right?
Yeah. I mean,
in a sense, man.
You had tuition in a lot of other things too.
Yep.
Every L you take is a lesson.
Yep. So. Yeah. No such thing as a loss, man. Exactly. Only a lesson.
Yep.
So, moving on, is there any advice that you would give to someone who wanted to follow in your footsteps? Like certain things to watch out for, certain ways to maybe operate other than, building the right team, investing in the right people when you have to?
Yeah, I mean, it's a very, I know that we're kind of on the blueprint here, but there's not necessarily like a blueprint that, it's not a one-size-fits-all thing. I think you got to take the time to figure out what your strategy is going to be. Define it, write it down, bounce it off people who are in the business, and, take some chances reaching out to people that you're maybe not comfortable reaching out to, because you just never know when somebody is going to say yes to grabbing a coffee with you, and then it turns into a relationship, it turns into a partnership, and at the very least, you have you're able to spend an hour with somebody who has a different perspective than you do. So I would say certainly be open to making those connections, define your strategy well, and then have not only conviction but commitment to it. And that's not to say that you should be totally rigid, because if you are, then at some point it's going to come back to bite you. I think you have to be flexible and you have to be adaptable. But, if your objective is to get into multifamily real estate and you buy one or two buildings, and then somebody, a friend comes to you with this great commercial deal where he's going to start a restaurant and the numbers look awesome, that is probably something you should really step back from. especially early on, because you just don't have the capital depth or the expertise or understanding of that particular segment or asset class to do well. You would be relying on somebody else heavily to be successful with that venture. And in the beginning, you can afford some losses, you can afford like small ones, you can afford some costs, but you can't afford, catastrophic. If you miss on one of your first 3 acquisitions or your first 3 deals, it's going to be very difficult to recover from that. You can recover from it, but it will throw off your trajectory in a substantial way. Okay. So I think, in the beginning, not being greedy and understanding that, like, if you hit a single or you get a double, that is very solid for somebody in their first couple of years. And I'd look at real estate as a multi-decade investment. We really try not to sell anything, and if you can do a good deal today, and you do just one a year, and you're 30, you do one a year, by the time you're 40, you've done 10 deals. And that is a substantial amount of equity that you've probably built up over that period of time. You don't need to do 50 deals a year. You don't need to do a $100 million deal to be successful. Success is defined in your own mind. So I think be realistic about what your strategy is, be realistic about what your overall objectives are, and then stick to that. And as the world changes, be adaptable. Be open to expanding your horizons, but don't get wooed by instant gratification or fast money, because it's probably not going to last that long.
Yeah, very fleeting.
Exactly.
Yeah, that instant gratification, man. So I like how you mentioned the disciplined. I mean, I think not having an ego about things is very valuable. I think you and I had a conversation before where you mentioned that, man, and I think that helped me to really be like, hold on, let me take a step back. Am I putting my ego into things, man? So I appreciate that insight. Is there anything else that you want to tell the audience or give advice on?
The thing that I did and still do that actually has really helped me be active in terms of our transactions is that people are always looking at like what's on MLS or like what's on the market. And what I really did was look around a neighborhood or an area that I liked and that I wanted to own stuff in, and literally ring people's doorbells. So don't be afraid to, honestly, if you see somebody out working in their yard, you see a tenant in front of a building bringing in their groceries, help them bring in their groceries and say, hey, who's the property manager? Can I get his number? I have probably put together 6 deals over the last year and a half from interactions like that. And almost all the deals that we do now are off market.
Nice.
So, when something is on MLS or like on the open market, like everybody has eyes on it. If you identify a building that you like and that kind of fits into your strategy really well, don't be afraid to knock on their door, because even if they don't want to get coffee with you now or they are not interested in selling, 3 years down the road, they might be. And you're just going to be in a better position and more prepared to take advantage of that. So hard to find a deal right now. And if you do find one, it's highly competitive. So, you can either be first, you can be smarter, or you can cheat. And, I am not portraying myself to be particularly smart. I don't cheat. So it's much better to just be first. And if you want to be the first to a deal, you just got to go knocking on doors.
So if there's anybody who wants to do business with you or reach out to you, what's the best way for them to contact you?
Probably just email. I don't do a lot of social media. Like I said, I kind of fly under the radar. But our email for the firm is bold, B-O-L-D, propertyholdings@gmail.com. Or you can find me on LinkedIn, I think.
Yep, cool, man. All right, so Isaiah, man, thanks for coming out. Thanks for sharing your keys to success. And thanks you, man.
Absolutely. Glad to be here. We'll do it again soon.
Yeah, definitely. Got to come back for another one. Visit our website to stay up to date on exclusive content. follow us on LinkedIn and follow us on IG as well. And if you're in need of commercial real estate financing, then don't hesitate to reach out to me.